TechAfrica News podcast from Africa for Africa. In partnership with Smart Africa. Welcome to TechAfrica News podcast. We're here today in Johannesburg at the MTN headquarters, and I'm very glad that we finally made it. I have Ralph Mupita, President and Group CEO at MTN. Nice to have you here today.
Thanks for having me, and look forward to the conversation.
Thank you. So the financial year 2024 just closed. So if you summarize it from the macroeconomic perspective and also the bigger challenges you had, what would you say were the biggest challenges, and where are you very happy about that you could maintain such a notable result?
Yeah, look, we were pleased with the results that we shared with broader stakeholders a couple of weeks back, and there were like 6 key messages, and in those messages are the areas of what were great opportunities, things we were proud of, and areas where we can improve. I think the first key message we had was that the underlying growth in the business was strong, and when we look at the performance of our business in the aggregate, the macro had masked, in particular, the first half of the year, where we had severe depreciation of the naira in the first half, and then it stabilized in the second half. We also had inflation in the second half of the year start to abate from the very high levels of elevated inflation. Nigeria was in the 30s. Ghana was starting to come down in the 20s and so forth. South Africa had been stable. So both the currency and the inflation had impacted our results. But our second half of the year, better service revenue growth, better earnings, better cash flow generation, cash upstreaming, balance sheet much stronger. So that gave us encouragement about the momentum coming into the year. The second thing we really were pleased by is that we're seeing the ecosystem continue to expand in Fintech. When you look at our Fintech, in constant currency transaction value, $320 billion worth of transaction value through our system. Our networks carrying data traffic are growing at 30-40% across our various markets. So there is a case for continued demand for our services. Smartphone penetration, a measure of kind of internet adoption. We have 291 million customers, and about 150 odd are using data regularly. So there's still almost half of our customers still stuck in the voice era, not having. So that gave us good cause to believe that the growth thesis is still there. We executed on our localizations. We exited some markets. The balance sheet is stronger. We pointed to Nigeria also reinstating guidance because we have a better visibility, we believe, and that we should see a V-shaped recovery in Nigeria. And obviously we spoke about the dividend. So those were the kind of 6 key main messages. And to your specific question, macros have been abating. I think right now what we're looking at is what are the implications of the global trade tariffs that have been announced more recently. But up to now, the macros are looking a bit better, across our major markets, and inflation is very well controlled. But for us, the opportunity for driving digital and financial adoption is enormous. And so we remain excited about the opportunity, and notwithstanding that the macro has some levels of uncertainty.
So we can say that the Nigerian business has still a deep impact on your financial result.
No, it is. Nigeria pre-2023, you'd have seen Nigeria's 40% of the earnings of the company, and quite close to 50% of the cash that the group generates. So it's a very, very big engine. We have 80 million odd customers out of 290. So 1 in 4 of MTN customers are Nigerian. And so the Nigerian growth is very closely related to how the group grows. And so when we had the currency shock, that shock came through even in our share price. But as I said, and there are smarter people than me who write about MTN, that as we look forward, where we say, okay, the currency has abated somewhat. Now the naira is 1535 odd. Inflation is in the 20s, beginning to come down. The Central Bank of Nigeria continues to have a orthodox monetary policy approach. and tightening rates. Dollars are increasing in reserves in Nigeria. The fuel subsidies through. I was in Lagos not too long ago, and Carl and I kept getting stuck in traffic. And to me, as annoying as that was, actually that was a sign that Nigeria is back and hustling, and the bustle of Nigeria is back. So we're very constructive in Nigeria, and actually the capital that we allocated to Nigeria, we basically doubled it from last year to this year. So we're anticipating that we should see kind of a V-shaped recovery in Nigeria.
So despite all the headwinds, we can summarize it was a good year so far.
Look, we had, at the time President Tinubu came out and announced the structural reforms of, liberalizing exchange rates, removing the fuel subsidy and so on. We had said to stakeholders, I remember it was actually our Capital Markets Day, or just after, where we said, look, there are going to be several quarters of pain to come. But that's pain that the economy and we will need to take for better medium to long sustainable and structural growth trends. So we've gone through that very painful transition of the currency, and now we have some tariff hikes that we can that will support our financial sustainability. So we had anticipated it. You could argue, did you anticipate the depth of it and the length of it? Maybe we anticipated the Naira would have been closer to 1,100, not 15. And maybe it was 2 quarters of more pain than we had thought. But it's not like we hadn't seen it coming, and we're ready for it. We're always thinking about building a business for the medium to long term. And if there are any short-term impacts or volatility, we need to figure a way to ride it out. And so last year in Nigeria, what we said is we have a 5-point plan. We went to our stakeholders, here's a 5-point plan. Here's how we'll do. And if we execute on all this, by the time we come and talk to you next year, we should have made good progress. And that came to pass. So we still see Nigeria as a very important part of the story. The company is economically 1/3 Nigeria, 1/3 South Africa, 1/3 the rest of the other markets. So,
So the engine is South Africa and
Nigeria. Yeah, South Africa and Nigeria are the engines of growth.
Mm. So the so-called Liberation Day has come. I know we don't know much yet. We have to wait how it will actually affect. But how would you describe it in one sentence?
I think creating significant uncertainty. And I think the significant uncertainty is across, equity, debt capital markets. It's around currencies, volatility. I think the VIX hit a recent all-time high in days past. I think what everybody is agreeing to, and maybe some of what I'm saying is what I'm reading, what the pundits are saying, is, if the prospects for recession in the US were 40%, according to JP Morgan, they're now 60%. So that's quite a significant swing in a short period of time. The full impacts of the tariff, again, leveraging JP Morgan's article, unknown but likely to slow down global growth and push up inflation. Now, the second order effects of those is that emerging markets such as ours, generally the transmission mechanism for these global shocks does come into emerging markets, and it comes into emerging markets in a magnified sense. So it's very early to tell. But what we're thinking about, in these early days is where are the areas where there could be impact? We look at the supply chain. We order equipment for our networks and IT that's sourced in China and in the global north. How should we be thinking about where our purchase orders are now? And if they're fully in and we've paid for them, that's fine. We've de-risked both delivery and exchange. And so, assessment of the supply chain and noting that. The debt that we have, how much debt do we have that's kind of floating or fixed rate? And what can we anticipate it moves to if we look at what the bond market is saying to us right now? Where do we allocate capital? What are the good ideas that we believe we can allocate capital to generate returns? And also just making sure that in this time of challenge, we're not also missing the opportunity. Because, I think it's Warren Buffett who says, you make money when there's blood on the streets. So there's a lot of blood on the streets. But coming back to opportunity, we often say don't waste a good crisis. So what is the good crisis that we won't waste now? And these are things and thought processes that we will be having discussions with our board. But as you say, it's very early now for us to be more determined. And I think one would need to wait, for a couple of weeks, 6 weeks or so to understand the direction going forward. But there are some things that you can already assess, like the ones that I mentioned, supply chains, how you're allocating capital, how you're looking at your debt, and so forth. Those things you can start to think through and act now.
Yeah, and at the end of the day, it will affect the relationships between African countries and the United States. That's for sure. When we look at the African continent, we see that digital transformation is one of our, most important topics if we would like to see economical growth. Yeah. And you as an MNO, you're one of the drivers. You build a foundation through the networks and digitalization. How do you see the role of MNOs in this journey as of today?
I'm excited about building digital ecosystems across Africa. I think that's the reason I get up in the morning, because I say to myself and to my team, we have a profound an important role to shape the future of this continent. And as MTN, sitting or standing on the shoulders of those who built this company 30 years ago, we're at the epicenter of kind of the digital economy build out across Africa. So what excites me is that I think there is a clear understanding by nation states that we operate in and we engage with, the understanding that the digital economy can be an accelerator to socioeconomic growth, that it can create benefits and multiply effects actually in certain industries. And you do that with very little infrastructure build. If you think about how economies generally get built, you build roads, you build rail, these things all take time. But building off a digital ecosystem takes, much less time, particularly leveraging wireless networks. So there's part of us that's building the digital infrastructure in the way we wirelessly and putting fiber. I think the other thing we do as MTN is the financial inclusion, because we're saying, well, this digital infrastructure and the service that's sit above, they should enable more and more Africans to be part of a kind of a normal economy where a lady sitting out in Kumasi in Ghana can sell her wares on the internet, have the logistics such that her wares can be picked up, sent to Accra, shipped to Kampala. She's just sitting in a village making her wares and has a phone. Mm. And on her phone, she has some form of currency, and she has a website. She can drive some very basic e-commerce. So there's an enormous ability for the digital economy to power Africa's growth and socio-economic independence. I often look at India and look at what has happened in India since 2014, Prime Minister Modi, with his Make in India, and then driving the digital economy, driving for cashless transactions, less cash in the system. And look where the country is. You got 1.5 billion people covered by 4G layer and increasingly 5G, and they've got a very powerful digital ecosystem. The Karana model that the folks in India speak about, I think it's Geo talks about the Karana model, and that can be built here in Africa. So,
but there's some similarities, I agree. But wouldn't you say that the big difference between India and Africa is that we are so diversified in terms of cultures, developments, understanding?
So the cultural aspects I agree with, but I would also argue that India is not one country. They have over 900 official languages and 1,500 in total. So I would argue that India's got a whole host of subcultures. I think our real challenges in Africa to get to that state are on a couple of dimensions. First is regulation. And I always say to people who listen to this part of my narrative, you must take it with a pinch of salt, because you'd anticipate I would say this as an MTN CEO. So we need more regulatory harmonization. The regulations differ too much from one country to the other. And if we can harmonize regulations with the goal of saying we want the digital assets and the digital economy to power the growth of Africa, and at the AU level, there's a consensus around that, and there's an immediate implementation market to market, I think it'll make big differences. Now, each time we have a spectral or license renewal in each country, it's like we're starting from scratch. There should be an AU approach to it that enables us to have a consistent application of licensing, spectrum. How do we treat smartphones when they get imported? Do we reduce duties and so forth? So to me, Africa needs to, first of all, say this digital economy is what will drive our growth forward as a continent, and will actually be a powerful driver for intra-Africa trade. And then we say everything else must hang off this thing. So to your challenge, which is a good one, I'll say regulatory harmonization more than cultures is what we don't have, and we need it quickly. I think the second thing is take a view on competition and skewing competition policies across markets more towards investment. Now, there's always in competition the balancing of three forces. The one is choice, the one is public interest, and the final one is investment. And it's a very to find the equilibrium of all those three things, requires both science and art, I would argue. But the countries that are winning and are building tech champions are the ones that are taking a competition policy and approach that's more investment driven, not ignoring public interest or competition. And I think all you have to look at is the US with its tech champions. China's built tech champions. India's tech champions. And the common denominator is that they've tilted competition policy slightly towards investment. That's what we're lacking. So beyond regulation, competition policy. And I think the third and final is we've often spoken about creating kind of a single African currency or ease of movement of currencies. So part of what limits intra-Africa trade is payments. And there's a lot of good work that's being done, between the Africa Exim Bank and other central banks to start to think about kind of a simpler payment system that is not entirely reliant on you've got to access dollars for a cross-border transaction. That creates limitations and high levels of friction that slow down intra-Africa trade. So I would say cultures we can manage because we're already culturally diverse within the countries we operate in. Regulations, I would agree with you that there's some hurdles there. Competition and competition philosophy towards investment, remains a really, really big area that I would argue those two are probably the biggest of the three that I mentioned are still impediments for us.
So in your role as Group CEO of MTN, I think it's your 5th year this year, correct? If I'm not mistaken?
I just remember how many years I've been at MTN. I've been at MTN actually last week. It's now 8 years. Yeah, so it's probably 5th year, 3 years as CFO and 5 as CEO.
So when we look at policies and regulations, and that's a conversation I personally have since the last 8 years, do you see any movement or shifting of the understanding and mindset that we really need to develop this political will? This political will is so important. And also from the other perspective, to not perceive the mobile network operators as a revenue stream within an economy.
Yeah, look, I look back. I'm traditionally from financial services, so I've only been 8 years here in telecommunications technology. I think the own goal from the industry, probably 15 years ago, was to always talk about revenue. And it is a high revenue generating industry, but actually it's low earnings and return generating because it's so capital intensive. So we've created as an industry this perception that, there's a lot of money in this industry, but for every 100 units of currency, what's available to the shareholders is less than 10. The taxman gets 28%, the regulatory fees are all there, the OEMs, get as well. And then the shareholder is left with, at best, 10% to distribute and hopefully make a return. So the industry framing created probably part of the, let's call it societal perception about this industry is that they make a lot of money. They have very high revenues, but they actually make very little profits, to be frank. And most MNOs are operating below their own cost of capital to this day. So that's kind of an on goal, looking kind of in hindsight. kind of where we are now, my sense is that in different countries, when I talk to regulators, I think they get it. And they also need to bring along their own constituency. So we need to give them a bit of time. Having said that, I think we don't have an infinite amount of time to start making progress. I mean, we operate in multiple markets, but you see some markets that are more leaning in because they see exactly that the build out of networks, IT, the infrastructure, the digital infrastructure will help them. And, they're kind of doubling down. We've had some really good discussions with the authorities in Ghana, as an example. There's a new government there. We spoke to them about the new minister, Minister Samuel. We spoke to him about, what role can we play to accelerate Ghana's economic growth over the next 5 to, and if we align ourselves. And we do that actually pretty much in every country. We go and ask that question is, how do we align to the socioeconomic goals that you have, rural coverage, expanding digital infrastructure, moving 4G? How do we work together to support the device ecosystem? So my sense is that there's a lot more leaning in today than maybe 5 years ago. And that's good. But I think now we need to accelerate because we now have this new wave of technological evolution driven by generative AI. And let's not get stuck because most of the markets, let's not get stuck in the past because most of the markets in the global north, they are already fully invested in this AI whilst we're still moving through 3G, 4G, ultimately to 5G. They're moving ahead. And I really fear that as Africa, we could get left behind if we don't get our act together.
Yeah, technology is so fast, way faster than policies. Yeah, I agree. Let me come to AI because you just mentioned Ghana. I had an interesting conversation in Barcelona, as you remember, with Minister Samuel, and he said something very encouraging when he explained, look, we need AI in Africa, from Africa, for Africa, which brings the right identity. I think we need to start to build an identity for Africa where we say, look, we don't want to left behind. I fully agree. But how can we build a connection between the private sector and the public sector in order to achieve that?
Yes, I mean, I agree, with the sentiments from the minister that, ultimately we need to find, local solutions for our very specific local challenges, having said that, I think as we look at generative AI, and today it's largely a hardware story. You got to build these AI grade data centers. They need power and cooling. They need, types of chipsets, GPUs, TPUs, if you're talking about Google, and so forth. This is quite expensive infrastructure. And the hyperscalers are spending order of magnitude this year, $300 billion just in CapEx. You heard me talk about $2 billion for our whole enterprise as MTN. So they're spending 150 times that. And we don't have those balance sheets. So the technology right now is not accessible to Africans or many people in the global south. Point number one. But I think the deep seek moment was a very important one because what it did show was that actually as technology is evolving, and in China, they've taken a different, or at least in DeepSeek, they've taken a different approach to it, open source as opposed to proprietary. And the question is, how much can that scale even further on the cost curve and efficiencies? So I'm quite hopeful, being a believer in the power of technology and its transformative power and how technology can come through inflection points, that we will get the costs down for the infrastructure that sits on top of the inference layer. And at the inference layer, if the cost of production is affordable, there are many kind of use cases that become, for example, we have many people in our network who are illiterate, but they can speak their local language. So they, give them the dignity to be able to speak their local language in the way that we serve them. A future world could be one where there are no apps on your phone. Okay. You just speak into your phone and your voice prompt and the LLM, the SLM that's kind of behind will do all the interrogation and ensure that your service is delivered. I need to send money to Akim off my wallet, and there it happens. That world is coming where we just speak. So getting these LLM to ingest the African languages that we have 3,000 across the continent, and maybe there's 70, 80 that talk to the 80-20 rule. So I really do think that ultimately we've got to build some of the AI factories in Africa. So this whole concept of AI factories, where we take the data sets through to create the product, we need to get there, because our solutions are quite unique. I tell the story often of how we leveraging technology to really improve the people's lives. Blood transfusion. We use drones to drive to get blood from Kigali in Rwanda into the remote areas. That's not a problem or use case in many developed markets, but it is an important one now. So I use that as an example to say that our challenges and opportunities in Africa will be unique. So we need to figure out how AI works for us. We build our own solution, build an important part of the infrastructure within our own locations, and deliver the services to Africans and beyond.
Very interesting. You just mentioned hyperscalers, but hyperscalers, they have a big budget and they want to have the market, they want to have quantity, but they also need to have, let's say, the right clients. So, and it costs money. It's not cheap, and we are talking about low-income countries. So do you think we find a way to make it interesting enough for the hyperscalers to really invest in data centers in Africa, to really build them up, come up with the technology? When there's not actually a market, we struggle with devices as well in some areas.
Yeah, look, I mean, our approach to the hyperscalers is to partner as best as we can, and we partner them, in some of our services that we take to our customers. So I think you're absolutely right in that, regard, that the hyperscalers, get to, to a data center. We still need data that goes to the edge. And somewhere between the data center and the edge is scope for partnerships, and we kind of work together. So, we don't think of them negatively. We see them as part of the partners we need to keep customers connected. We are in consortia with hyperscalers on subsea cables. And as we look at cloud services, there's an area that we work with them. And AI would, be an area that's the same. And as you quite rightly point out, there is an end customer, the last mile. We have the capillarity of the relationship to the last mile with our 291 million customers, thousands and thousands of, businesses that work with us. And so there's an opportunity for partnership. I do, however, think that, the hyperscaler model will work in some parts of our markets. So South Africa is attractive, Nigeria will be attractive, and so forth. But there'll be markets where the economics don't make sense for them. Those markets still need to be served. And that's where, we may have a much more proprietary role in providing some of that AI infrastructure in years to come.
All right. Thank you. As my last question in terms of technology, we hear a lot about LEO, NTT. Do you see it as a threat or more as an opportunity also to serve very underserved rural areas?
I see LEO non-terrestrial networks as an absolute opportunity, and one that, we must all embrace. We're going to be in a world in the future where we're always connected, whether you and I go up a mountain, we decide to climb Kilimanjaro together, or we end up in Lake Victoria, in the middle of Lake Victoria, and we have a perfect connection. So given all the terrestrial assets, this is just adding as a non-terrestrial asset to keeping people always connected, even in geographically remote or areas of large water bodies. So my first thing is it's an opportunity. We see it in two forms. There is kind of the fixed side, where we either use partner for backhaul. We're already doing quite a lot of that. There's an enterprise opportunity there's also a broadband opportunity where we can leverage our own spectrum and work with these non-terrestrial constellations to serve our customers. And obviously, there's a D2D market where the satellite provider is trying to provide a service direct to the consumer, direct to device. And in that area, the satellite constellations are saying we'll do it all ourselves. But I think the threat of that to a wireless carrier fixed broadband oriented company is, there's a great report out. I won't mention the broker note given unless I give them free advertising. But they say they've studied the US and this is complementary. With very early stages of adoption, Starlink 6,500 odd satellites up, OneWeb 640 odd different technologies, the other ones with fewer satellites. So it's a fast evolving, and the Chinese are beginning to build their own LEO versions, and Space Sail is one, and they're beginning to go up. So I think it's a nascent area. It's an exciting area. It's going to be complementary, and you're going to see us strike a partner. We already have partnerships in 7 markets. So we're not waiting for the game too. So we're testing and learning as we're going along. So it's an exciting area. Probably not as exciting as AI, but right up there.
But it's more natural evolution from
a natural evolution, absolutely. Natural.
All right, great. Ralph, thanks for your time. It's a very inspiring conversation. It was a pleasure. Thanks for hosting us here in your headquarters.
Our pleasure.
Thank you.